Financial Group, LLC, is headquartered in Charlotte, North Carolina. Founder and CEO Tory Wood graduated from Cambridge College with a master's degree in management. Prior to receiving his Master's of Management degree, Tory received his Bachelor of Science degree in Business Administration with a concentration in management from Elizabeth City State University. With over 9 years of experience in commercial banking, Tory started his banking career at Bank of America, where he developed a love and passion for helping people. As a standout performer, Tory demonstrated a high level of financial expertise with a tremendous ability to connect with his clients. Tory founded M&A Financial Group, LLC, in 2015 to help small to medium-sized business owners secure the financing they need to help their business thrive. Tory, if you're ready, I'll hand it on over to you.
I'm ready. Thank you, Alex. And good morning and good afternoon to everyone out there. I just want to start off by thanking everyone for attending this webinar, and I hope you find some value in the information that I'm going to share with you today. Now, I thought it would be appropriate to end this year off with this webinar because applying for small business financing can be a complicated yet time-consuming process. So I thought it would be beneficial to share some information with you guys so you'll be better equipped for when you're ready to apply for a small business loan. So the question that brings us all here today is, are you planning for your financing needs in 2018? So during this presentation, we're going to talk about what exactly is a financial intermediary. We're going to talk about how to determine if you need to seek the services of a financial intermediary. We're going to talk about identifying the available sources of capital. We're going to talk about the challenges of obtaining small business financing. And we're going to discuss the benefits of utilizing a financial intermediary. We're going to talk about how we package your deal. We're going to go over some testimonials. And we're going to take some questions at the end. So, what exactly is a financial intermediary? So, a financial intermediary will work with the borrowers to determine their financing needs. The financial intermediary will help qualify the borrower for various commercial and industrial loans in the marketplace that the borrower may not have been aware of due to the various resources the financial intermediary has in the commercial lending space. Most traditional banks will not provide alternatives that may better suit the borrower. And just to give you an insight on our funding process, generally what I do when I first meet a client is I'll try to get better familiar with their business and get more acquainted with them. Once I learn about their business, we'll have a conversation, and what I'll do is I'll get the story. So basically what the story consists of is I will, ask them questions such as, how many times have you applied for financing? Who have you applied for financing with? How many times have you been declined? And how much financing are you looking to secure? And how quickly are you looking to secure that financing? So once I, get the answers to all of those questions, and I can make a determination as to whether we need to move forward with, the financing, I'll request specific documentation. So once I get that documentation, I'll organize the documents, and then I will review those documents to see if I can get the client qualified. Once I make a determination that I can get the client qualified, I'll submit those documents over to some funding sources that I feel will be interested in financing this deal. So once, I send those documents over to my funding sources and they decide that they would like to move forward, what they'll do is they'll send me over a letter of intent. So what I'll do is I'll take those letter of intent, LOIs, and send them all to the client. And then what we'll do is we'll review the LOIs, and then we'll make a determination on which lending source best suits them. So once I reach out to the lending source and let them know that, I want to move forward, what the lending, we'll send the application over to the client, and then they'll fill it out, and then we'll submit a full financial package over to the lender. So once the lender receives that package, then they'll go into what we call underwriting. And then once they do that due diligence in the underwriting process, we'll obtain an approval. And then once that approval is made, and then soon thereafter, we'll close on the loan. So just to give you a visual of this process map, the funding process is very straightforward, and we try to be as efficient as possible with the client. So many of our small business owners, may ask themselves, do I even need to seek the services of a financial intermediary? So when I'm speaking with a client, I generally advise them to ask themselves some very important questions. And those questions consist of, do I have time to investigate and research lenders and the funding options they provide? Do I need financing in a timely manner? Can I afford to wait? Do I have time to apply to one lender after another? And then finally, do I want to have my credit pulled, by various lenders? So if you answered no to any of these questions, then, you probably would need to seek the services of a financial intermediary. And going back to the last question, do I want to have my credit pulled by various lenders? You may want to take this one, very seriously, because, when you go from lender to lender and they're making hard pulls on your credit, each inquiry will, bring your credit score down 10 to 15 points. So you want to be mindful of how many, lenders you allow to pull your credit, because it could have a negative impact on your FICO score. Now, identifying sources of capital can be a very difficult task. There are literally thousands of lenders out there, and with those thousands of lenders, there are, maybe hundreds and maybe thousands of lending products. So for the small business owner that is very busy with the day-to-day operations, this could be a nightmare if you apply to the wrong lender. So, for example, I work with one of the premier merger and acquisition firms here in Charlotte. So basically what they are is they are business brokers. So when a small business is looking to sell their business, they'll reach out to this firm, and the firm will list their business for sale. And then that firm will go out and find some qualified buyers for the business. So what the firm found is that, when they allowed the client to go out and find their own financing, that was, that killed the deal. So now what they do is they refer, their clients over to financial intermediaries such as myself that have the network in place of lending sources that are ready to finance their business acquisition. So there are a ton of challenges that the small business owner faces when they're looking to secure financing. One of those challenges is just a lack of interest from the bank. I got a call a little while ago from a business banker that said, hey, Tori, I have a great guy that's looking to purchase a landscaping company, and he wants $250,000 to purchase some equipment. And we just don't, have any interest in financing a deal like that. So, generally, if a client approaches a bank and, they don't fit within the lending criteria, or the bank doesn't have a financing solution for them, they'll pass them over. Another challenge is increased regulation. After the 2007-2008 recession, there has been some regulatory overhang, meaning that the bank examiners and the regulators have forced the bank to conserve capital and not allow them to make as many risky loans. So, during the underwriting process, the banks now place more emphasis on the personal financial statement. They're going to analyze more of the borrower's personal income and their assets. And then also, there's a reduction in the loan to value thresholds, meaning that, the banks are now requiring that the client inject more of their personal funding into the project. So instead of the banks financing maybe 90% of a of a project, they're only, finance, say, 60, 70%. Also, the banks have higher credit score requirements. Some banks nowadays, they won't even talk to you unless you have at least a 700 FICO score. Finally, there are higher collateral requirements. 2/3 of all small businesses use collateral to secure loans. So after the recession, small businesses took a hit on their collateral, and which makes it more difficult for the small business owner to secure the financing they need because the banks have increased the collateral requirements. Another challenge is the downturn in community banking. In the past, community banks were the traditional bank for small business owners. The community banks were ingrained in the communities, and they built relationships with the small business owners, and had great relationships with the local business owners in the community. And when a small business owner wanted a small business loan, it wasn't that difficult to go into a community bank and get approved. So, once Dodd-Frank was passed in 2010, the relationship between the small business owner and the community banks, changed drastically. The community banks struggled and didn't have the capacity to keep up with the regulations and understand the regulations and implement the regulations and train their employees on all of the regulations. And then on top of all of that, they had to help their customers with their financing needs. So as a result, the banks ended up closing their doors because they couldn't juggle, keeping up with all the regulations and helping their customers at the same time. And then also, the community banks have, lost their presence within the communities because, the larger banks are, buying up all of the community banks now. So as a result, they're losing all of their market share. And if you take a look at this graph that was taken between 2010 and 2014, the banking industry as a whole was impacted by Dodd-Frank. But if you take a look at the small banks bar, you'll see, which represents the community banks, you'll see that the community banks were impacted the most, and 14.1% of all community banks ended up closing their doors as a result. Another challenge is, banks see smaller loans as less profitable. 80% of all small businesses apply for loans less than 500,000. So what the banks are doing now is that they're putting more emphasis on the transactional cost of underwriting a loan. So what they found is that it costs just as much to underwrite a $100,000 loan as it does a $1 million loan. So what they're doing is they're focusing more on the larger loans because larger loans mean bigger profit. And then if you could focus your attention on this graph right here, you'll see the percentage of applications from small businesses by loan size. So if you take a look at the first bar, you'll see that 39% of all small businesses apply for loans less than $50,000. 12% apply for loans in the range of $50,000 to $100,000. 17% of all small businesses apply for loans in the range of $100,000 to $250,000. And then 14% of all small businesses apply for loans within the range of $250,000 to $500,000. And then the last bar, you'll see that only 18% of all small businesses apply for loans larger than $500,000. So now that we've talked about, the challenges of obtaining a small business loan, we're going to go over some benefits that will overcome, those challenges, the benefits of working with a financial intermediary. So most small businesses they start with their local banks when they're looking for a small business loan. So I want to advise everybody on this webinar, and I generally advise this to everybody that I speak with, is to not limit your options to just the local bank. I get it. The local bank, it has instant credibility because you can go into the banking centers and you can speak with someone and you can touch someone, so that instant credibility is there. But when you're working with a financial intermediary, we work with lending sources all across the country. So, those lending sources are ready to compete for your business. So when you have those sources competing for your business, they're going to offer you the best rate out there. Another benefit of working with a financial intermediary is, we have a variety of financing options. Most traditional banks, their options are, very limited. And, if you, approach the bank and they don't have, the options that you may need, they'll turn you away and not even try to help you look for a solution. So if you're a construction worker that, need to, factor your invoices, we have account receivable financing for you. If you're looking to, buy a business, we have business acquisition financing for you. If you're, a business that's been leasing your building for years and you're ready to, step out on faith and purchase your building, we can, help you with commercial real estate financing. We have equipment financing. We have equipment refinancing, long haul truck financing, SBA loans, and also unsecured lines of credit. So, working with a financial intermediary, we have a variety of options. And if you don't see a product on this list that's applicable to you or your business, reach out to us anyway, because we're very resourceful and we can find a financing solution for you as well. Another benefit to working with a financial intermediary is that, we have access to a variety of lenders. So whether you're one of those bankable clients that have, excellent credit and great payment history, we have traditional lenders for you. If you're one of those clients that may have some, some challenges with your credit and some challenges with your payment history in the past, not to worry. We have non-traditional lenders for you as well, on standby, ready to finance your deal. Another benefit to, working with a financial intermediary is that, we'll negotiate, favorable terms on your behalf. So generally, when a client receives that term sheet, they'll take a look at the term sheet and, they'll take a look at the interest rates and, they may say, well, man, I wanted, 7% and, they're offering me 9%. Tori, can you, reach out to your lender and see if we could get that interest rate down? Or Tori, I see that I was offered 36 months and for a term, and I was maybe looking for maybe 42 months or 60 months. Is something you can do to, negotiate this longer term for me? Also they may see that, they may have a down payment that, maybe more than what they're willing to pay, and they may want that down payment reduced, maybe 10 to 20%. That come to me and say, Tori, is there anything you can do with that down payment? Can you negotiate a lower down payment, with your lender? Also with the fees, they may be, not satisfied with, the fees and maybe want the fees waived or reduced. I always go back to my lenders and see if there's, more favorable terms that we can offer the client. Now, granted, some of my lenders are, firm with their terms, and then, some are always willing to negotiate. So you never know until you ask, and when you do, I'll be more than happy to, go back and see if we can, negotiate, better terms for you. Deal management. This is the critical, because with small business owners, they're very busy with their day-to-day operations. They just don't have time to manage their deal flow. So basically, working with a financial intermediary, they can delegate that responsibility to a professional such as myself, and we'll keep them in the loop on what's going on with with their deal. So whether it's some updates or some questions that the lender may have for the client, we'll take that information and we'll bring that back to you. One of the best practices that I take and maintain from Bank of America to this day is that we always have a 24 to 48 hour follow-up rule. So what that is regardless of whether the lender has an update or not, we'll always follow up with the client within 24 to 48 hours to let them know if there's an update or if the bank is still working on their deal. So you never want to be in a situation where the client has to reach out to you and ask you what's going on with the lending process. You always want to maintain that follow-up rule of 24 to 48 hours from beginning to end to make sure that the client is engaged in what's going on. Alternative financing is another benefit. Everybody doesn't have a 700 FICO score and great payment history, and that's okay. We have alternative financing options for you as well. The business directed retirement account program. That program will allow a person to access their retirement funds with no penalty, so you can invest in your business. For the construction worker, it takes about 30, 60, 90, 120 days to get paid on your invoices. We have lenders that will factor your invoices and advance you up to 9% on your invoices so you can maintain your cash flow. Security-based lending, for a small business owner that, has a stock portfolio, we'll lend you up to 80% of the value of your portfolio so you can invest in your business. And with this program, there's no FICO score requirements, no time in business. So, this works well for a lot of people that would like to use their, stock portfolio for collateral. One of my personal favorites is the unsecured finance program. For the aspiring entrepreneur that has been fiscally responsible, that has great credit score and good payment history. If you're looking to buy a business, we can secure you up to $350,000 in unsecured lines of credit. We're living in a climate today where you can't just go to Bank of America or Wells Fargo and say, can I borrow $350,000 for a startup? Banks are not willing to lend on startups. So this would be a great program for anyone that would like to start a business. And also the great thing about this program, there's a lot of myths out there that the interest rates are very high on this program, but that's not the case. These interest rates are very competitive in the single digits, and in some cases, for the first year there's a 0% APR. So the terms and rates on this program is very competitive. So anyone that's looking to maybe start a business or just need some unsecured line of credit, this would be a great program for you. Packaging your deal is another benefit. This first bullet is very important. Submitting your documentation once. When small business owners take the responsibility of going out and finding their own financing, they generally have to fill out long, lengthy applications and submit full financial packages to various lenders, and while getting that credit pulled multiple times. When you're working with a financial intermediary, you submit your documentation to us once. We'll submit the documentation over to maybe various lenders that we feel that would be interested in financing your deal. And what they'll do is they'll do a pre-screen. So they'll look at the deal. They're very experienced with this, so they can take a look at your financials without even pulling your credit, and they will know if they're interested in financing the deal and if this deal can get approved. So what we do is we'll package it up, submit it, one time submit it from the client, and then we'll get all this interest from various lenders, and then we'll let you decide on which lender that you're willing to move forward with. So in the meantime, we'll, present your deal and tell your story in a way that they're looking to receive it, which will ultimately get you approved for your loan. Now, this is one of the reasons why, I started M&A Financial Group. It was to, help people, obtain their dreams. This is Patrick and his wife. They're standing in front of their, pet store the day that, they closed. But a couple of months prior, it was a very stressful time for Patrick because he was running into all kinds of trials and tribulations and, trying to, seek financing. And the thing with Patrick was that he had an excellent credit profile. So you would think with a great, great credit, fiscally responsible, good payment history, he could, obtain the financing that he needs to purchase this store, but that just wasn't the case. Patrick was going from lender to lender. He even seek the services of a financial intermediary, and they were trying to charge him all types of retainer fees before even securing any financing for him. He finally found a bank that was seriously trying to help him secure the financing with an SBA loan, and the banks were not interested, and they declined the loan because they weren't happy with the leasing agreement that Patrick signed with his landlord. So with the 7(a) loan, the terms are generally 10 years, and Patrick only had a 5-year lease, so that was a deal breaker for them, and the loan was declined. So Patrick was working with the business broker, that reached out to me, and he told me his situation, and he asked me that I have a financing solution for Patrick. So I told him that I did. So he gave me Patrick's number, and I called Patrick, and we had a long, lengthy conversation, which allowed me to get the story, from Patrick. So long story short, from the initial conversation until the day of funding, it took us about 2 weeks to secure him the funding that he needed to purchase this store. So I'm very happy for Patrick and his family. This is the first of many locations that I'm sure Patrick will have in the future. And if you're ever in the Mint Hill area and you need some pet supplies, reach out to the Wolf and Hoof, and they'll be more than happy to assist you. This is another one of my clients, a very reputable trucking company. This client financed about $2.5 million in equipment with his local bank, whether it was trucks and trailers, things of that nature. And just with the trailers alone, his payments were about $41,000 a month. So, a year into the term, the payments was a heavy burden on the client, and the client was, looking to refinance his loan and get a longer term. And he reached out to the bank that initially, financed the equipment, and they wouldn't, refinance. So he went from that lender to another lender to another lender to another lender, and nobody in the local area would, help him out with his refinancing because, he had some, issues with his credit, and his payment history was kind of suffering because it was kind of, hard to maintain all of, the payments with all the equipment that he had financed. So, this client was working with another financial intermediary that, was looking to get him financing, but, they couldn't, secure a lender to help him out. So that financial intermediary reached out to me, and I was able to assist. So this goes back to what I was saying earlier, where you don't want to limit your options to just, your local bank, because out of all places, I work with a lender in Utah that was willing to, refinance his equipment. So what they're going to do is they're going to refinance his equipment in two phases. So for the first phase, it's going to be 1.25 million, and once they give about 4 to 6 months of payment history on him, satisfactory payment history, they're going to move to the second phase and refinance, the remaining amount. So, client is, very happy that we were able to find him a lender to refinance his equipment. He's gonna benefit from thousands of dollars in savings each month, and it's gonna better improve his cash flow. So to reiterate, what from a previous slide, we offer account receivable financing, asset-based lending, business acquisition financing, commercial real estate financing, equipment financing, equipment refinancing, and long-haul truck financing, SBA loans, and also unsecured lines of credit. So again, if you don't see anything that's applicable to you or your business, reach out to us anyway, because we're very resourceful, and we'll be more than happy to assist you with your financing needs. So I guess the $1,000,000 question for today is, what are you going to do now? Are you going to, take time off, from your busy schedule, from your business, your day-to-day operations to, apply for financing? Are you going to go from lender to lender? Are you going to, submit a full financial package to, multiple lenders? Are you going to allow those lenders to, those multiple lenders, pull your credit? So I would, advise you to, and tell you what you should do is you should reach out to a financial intermediary, such as, myself, that take that stress and that headache and all that other, stuff that goes into, researching, which lender is best suitable for you, and let a professional such as myself, take care of that for you. Give us a call today, or whenever you may find a need for the financing, and we'll be more than happy to give you a free analysis of your commercial financing needs. So again, we're M&A Financial Group, LLC, headquartered here in Charlotte, North Carolina. Our contact number is 888-811-3645. My email address is tori@mafinancialgrp.com, and our website is www.mafinancialgrp.com. Again, I appreciate you attending, this webinar. I hope that you found the information, some value in the information that I shared with you today, and look forward to speaking with you soon.
Thank you so much, Tori. That was very informative. I really enjoyed that. It looks like we have some questions that came in. The first question asks, what is the typical cost for an intermediary?
Well, that's the thing. There's a lot of intermediaries that charge fees, upfront fees, to provide the services of small business owner looking to obtain financing. Well, M&A Financial Group, we don't charge the client any fees. All fees that we receive, we generally get from our lenders. So, there's no cost to you for any, free analysis of your financing needs, and you don't pay any out-of-pocket fees to us, and we generally get our fees from our lenders.
Great. Another question came up. It asks, do you have any geographical limitations?
No, we don't have any geographical limitations. We work with lenders across the country, and we work with clients across the country. So no geographical limitations, and anywhere in the United States we'll be able to assist.
Awesome. Another question that came through asks, what about PO financing?
Purchase order financing? We definitely offer purchase order financing. We have some great lenders that they do factoring as well as purchase order financing. So if you have a need for that, we can have a one-off conversation, and we can definitely assist you with that as well.
Great. Another question asks, tell me more about business acquisition financing.
Okay, well, that's actually a very broad question. We work with SBA lenders regarding business acquisition financing. We work with private equity firms looking to, finance business acquisition. So we work with a variety of lenders for any, client that is looking to, purchase a business. So, that's a one-off conversation that, we can have as well. Reach out to us and, just tell us a little bit more about, your business, acquisition financing needs. And, we're very resourceful in that aspect. That's one of our main focuses. So we should be able to assist you with business acquisition financing.
Great, thank you, Tori. We do have another question. This question asks, what are the 4 to 6 keys to being financeable?
Well, generally, what we look for is a lot of our traditional lenders are looking for at least 2 years in business, pretty decent cash flows, a little experience and great expertise and knowledge in your field of business. So I would say that the focus would be at least 2 years in business, positive cash flow. So those are the two main things. And then too, with if you have some some challenges with your credit, depending upon the situation, we'll get the story and we'll present it to our lenders in a way that they're receptive to it.
Great. We do have one last question. One of the attendees is concerned about the geographics because he is Canadian, and he was wondering if you guys have a Canadian partner.
Well, we do have some international, partners. I would suggest, reaching out to me and let's have a one-off conversation so we can, deep dive more into your situation. But we do have some international lenders, depending upon your industry. So, reach out to us and, so we can talk further on it and see if we can come up with a solution for you.
Great. We actually did get a last-minute question come in. The question asks, personal pledges are normal. What are some do's and don'ts?
Repeat that one more time.
Yes, of course. Personal pledges are normal. What are some do's and don'ts?
And when you say personal pledges, what exactly?
He doesn't reiterate on it. So to the attendee that asked that question, if you want to email Tori or give him a call.
Yeah, please give me a call and we can deep dive into that further and analyze the situation and see if we can come up with a solution for you.
He actually just asked and said it was a mortgage example, like if you could give a mortgage example.
Yeah, I would suggest that you just give us let's have a one-off conversation on that, and we can talk about it further and see what solutions we can come up with for you.
Wonderful. And then we did have one more question come in, and this will be the last. It asks, what are typical CCRs on a deal?
Typical CCRs on a deal?
Yes.
Hmm. What I mean, there's a variety of deals out there. That's kind of a broad question. Um, do you have time to specify on what kind of deal you're making reference to?
Yeah. You know what he can do is if you want to get into contact with Tori so you can guys so he can answer your question better on this, please email him or call him. All right. That looks like that's all of the questions that we have, Tori. Again, if anybody is interested, Tori's contact information is on the screen, his phone number, his website, and his email address. Also, you can check out all of our previous BOSS webinars on demand by visiting our website and clicking on webinars. Make sure to join us on January 18th for a webinar featuring social media as the topic. You will be able to register soon on our website. Again, thank you everyone for joining, and I hope everyone has a wonderful rest of your day.
Thank you, everybody.